Millions vanished overnight. Bernie Madoff was a financial titan who orchestrated a colossal Ponzi scheme for nearly 4 decades. His deceit began subtly attracting wealthy individuals and institutions with promises of consistently high returns. He built a sophisticated facade of legitimacy, operating out of a discreet New York office, employing a small group of trusted associates, perhaps fewer than 20 people, to manage the elaborate charade. The scheme ingeniously relied on a steady influx of new investor money to pay off earlier ones. A classic pyramid structure that expanded dramatically through word of mouth and the irresistible lure of steady annual profits, often advertised between 10% and 12%, even during turbulent market downturns. Investors were consistently shown utterly fake statements, meticulously doctored trade confirmations, and a completely fabricated track record of astounding success. Thousands of people, perhaps more than 5,000 individuals, fell victim to his elaborate deception, believing they were participating in exclusive, sophisticated trading strategies. The operation grew to an astonishing size, estimated to have involved over $65 billion in total funds over its long lifespan. It became undoubtedly one of the largest financial frauds in all of history, impacting thousands of families, numerous charities, and essential pension funds globally across dozens of countries, with estimates suggesting more than 50 nations felt the brunt of his greed. The devastating collapse occurred in 2008 during a widespread global economic crisis, when the flow of new investments finally dried up. When new money stopped flowing in, the entire fraudulent empire crumbled, revealing the utter devastation it had wrought for so many years. Many victims lost their entire life savings, their homes, their retirement plans, and their sense of security. The subsequent investigations uncovered countless layers of meticulous deception that had been painstakingly maintained for so many long years. Madoff was eventually sentenced to an unprecedented 150 years in prison, a truly stark reminder of the immense betrayal and the catastrophic fallout caused by his calculated chaos. The sheer scale of his perfidy left an indelible mark on global financial markets and the corresponding regulatory bodies, and it prompted widespread reforms and a thorough reevaluation of oversight mechanisms. His intricate web of lies ensnared countless innocent lives. It proved that even the most trusted and respected figures can harbor the darkest, most destructive secrets. The fraud continued from the early 1970s all the way through 2008, a testament to its deeply embedded nature. $65 billion disappeared into thin air. Bernie Madoff, a respected financier, orchestrated this colossal fraud nearly 40 years, starting in the early 1970s and continuing through 2008. He meticulously constructed an illusion of legitimacy from a seemingly modest New York City office, employing a surprisingly small staff, perhaps just 19 individuals, to manage the vast web of lies. His method was deceptively simple, promising investors consistently high annual returns, often between 10% and 12%, regardless of market conditions. This irresistible lure drew in an exclusive clientele of wealthy individuals, large institutions, and numerous charities, all believing they were part of an elite financial operation. The entire scheme was a classic Ponzi pyramid, relying purely on a continuous influx of new investor money to pay off the older investors, creating a false sense of security and success. Madoff presented utterly fake monthly statements, doctored trade confirmations, and a completely fabricated track record of astounding trading performance. Thousands upon thousands of people, more than 5,000 direct investors, eventually fell victim to his elaborate deception. The sheer scale of the operation was staggering, involving a cumulative total exceeding $65 billion over its long duration. This made it undeniably one of the largest financial frauds ever committed in history, leaving an indelible mark across the globe. The devastation spread far and wide, impacting thousands of families across more than 50 nations, with countless individuals losing their entire life savings, their homes, their retirement plans, and their fundamental sense of security. Prestigious universities, vital medical research foundations, and countless charitable organizations also suffered immense losses as their endowments were wiped out. The intricate web of lies sustained itself for decades because of the deep trust placed in Madoff himself and the perceived exclusivity of his investment fund. The scheme finally unraveled in 2008 amidst a severe global economic downturn when the essential flow of new investments completely dried up. This abrupt cessation of new capital exposed the rotten core of the entire fraudulent empire, causing it to crumble dramatically overnight. The subsequent intense investigations revealed layers upon layers of sophisticated deception, maintained with painstaking detail for all those years. Madoff was eventually given an unprecedented sentence of 150 years in federal prison, a severe punishment reflecting the immense betrayal he inflicted. The catastrophic fallout prompted significant reevaluations of regulatory oversight mechanisms across global financial markets. His long-running treachery proved that even highly respected figures can conceal the most destructive secrets, leaving a legacy of shattered trust and immeasurable financial ruin for generations. The human cost of his greed was immeasurable, extending far beyond monetary figures into psychological and emotional suffering for countless innocent victims who had placed their faith and their futures in his hands. Thousands of lives were financially destroyed forever. Bernie Madoff, a financier, orchestrated this massive betrayal for 40 years from the early 1970s until 2008. $65 billion vanished, impacting over 5,000 direct investors across 50 nations. His modest New York City office held 19 staff, managing elaborate deceit. He promised annual returns of 10% to 12%, luring wealthy individuals, institutions, and charities. This classic Ponzi scheme relied on new money to pay old investors. Fake monthly statements, doctored trade confirmations, and fabricated track records sustained the illusion. Deep trust in Madoff kept fraud alive until 2008, when a global economic downturn dried up new investments, causing an abrupt halt that revealed the rotten core crumbling his scheme. Investigations uncovered sophisticated deception layers. Madoff received 150 years in federal prison, reflecting immense betrayal. Catastrophic fallout prompted reevaluations of global regulatory oversight. Thousands of families lost life savings, homes, retirement plans, and security. Universities, medical research, foundations, and charities suffered immense losses. Endowments wiped out. The web of lies sustained through perceived exclusivity. His treachery proved respected figures can hide destructive secrets, leaving shattered trust and immeasurable financial ruin. The human cost of greed extended beyond money into psychological, emotional suffering for innocent victims. This catastrophe touched every corner, affecting millions directly, indirectly. It was a massive financial disaster, changing investment and regulation views. Many victims faced bankruptcy, mental health struggles, lost hope. 19 individuals formed an effective fraud hub. Fake statements, generated monthly for years, convinced investors. 10 to 12% consistent return was a red flag ignored by many. The operation ran undetected for 4 decades, an astonishing feat. The 2008 global financial crisis forced schemes collapse. Long-term impact on global financial regulations led to new safeguards. Over 5,000 individuals directly invested money, never seeing return. 70-year-old Madoff maintained his facade, confessing when no option remained. His setup evaded Securities and Exchange Commission scrutiny for years, a significant oversight failure. Overall losses were never fully recovered, despite trustee efforts. Countless smaller investors were wiped out, unable to recoup a single dollar. The fraud highlighted risks of concentrating wealth in one trusted individual. Families saw legacies crumble, impacting 3 generations and more.